Albert, thank you. That's a wonderful introduction, and thank you for chairing this panel. I'll start out with just what I think is an incredibly positive story, which is that the regulatory environment is working for the economy and for job creation. And I think that's apparent to me today. I think we thought about that before we formed Atlas Mara. We raised equity last December, 9 months ago. We announced the acquisition of Bank ABC at the end of March, so just over 6 months ago we announced that acquisition. I will tell you that it was probably the most complex transaction I've ever been associated with. 40% of the shares were owned by a publicly listed German private equity fund with a bunch of hedge fund managers as investors. And there were banking operations in 5 countries with 5 regulators and a small position in a 6-country Nigeria. And yet, in 5 months, we had full regulatory clearance to reopen trading on the London Stock Exchange as an operating company, as a bank, with regulatory approval from Botswana, Zimbabwe, Zambia, thank you, Governor, Tanzania, and Mozambique. And I think what that made clear to me is it was very tough evaluation. It was a very tough process, but it was also clear that there is support from government and support from regulators for things that will enhance economic growth and the creation of jobs and investment, both of money in the private sector, but also people who bring operating skills. And that's what we hope we can bring in addition to money. I think the second thing I'd say on the more prospective is when I think about the opportunity in Africa and I think about the intersection of doing good and doing well, and I think about the opportunity for our investors and the opportunity for Africa, I keep coming back to small businesses. The impact on the economies and the impact on jobs of entrepreneur small businesses. And yet in the macro environment we're in, with many of the small domestic banks investing in treasury bills at very high yields in domestic currency rather than lend, with so many of the European institutions that have been over 50% of trade finance in most of sub-Saharan Africa for decades today, pulling their capital back to Europe because of Basel III, because of capital needs back home. With Chinese banks focused more on following their own customers. There's nothing wrong with that. For Chinese banks to expand internationally, the first rule of thumb should be to follow their customers, so they're lending to Chinese businesses, but not necessarily to domestic African businesses. So there is this huge void, and getting funding, getting capital, getting liquidity to small businesses. And I'll tell you another story just along the way. When we were doing our due diligence on Bank ABC, I was stunned at the first half 2013 financial numbers when I saw a 70% plus increase in net interest income. And the volume of business they were doing was fantastic. But in the second half of the year, they ran out of funding and they ran out of equity. And we see this in bank after bank after bank. So working with the central banks, working with the finance ministers, around capital, liquidity, and funding, and the ready access of capital, liquidity, and funding to safe banks that are growing, and working with them on how the private sector and the public sector can work together to get more money to SMEs. Is it small business credit guarantees from the government that help foster this? Yes. But it also has to be banks that are ready, willing, and able to not just invest in domestic T-bills, but to really drive lending to consumers and drive lending to businesses. Knowing myself, I could go on for the next hour and a half, so I think I better stop, Albert, or no one else will have a chance to talk.
Good. Bob, you are so gracious. I was just beginning to enjoy your story, so we'll get back to you. So Bob has actually nailed the right thing: capital, liquidity, and funding. I mean, when you operate cross-border, they are very, very imperatives that you should keep your eyes on. And he will be working with regulators to make sure that there is adequate capital, liquidity, and funding, and also channeling, actually, these monies to the SME, who are the engine of growth, and not to put into T-bills.
Doing business in Africa, you can't afford to be without Africa Investor.